Alrighty, hey traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and I'm going to grab a drink of water. Just 1 second, stand by. You don't need to hear this. Or do you? Okay, I'm back. Yeah, like I've said the last few days, you guys have to excuse my sniffles. It's allergy season here. Everything is wildly growing, and I've been spending a lot of time just with my kids in practice and just being out and about and trying to walk and do a little light jogging, things like that. So it's like my allergies have really been bothering me recently. Okay, enough about that. So let's talk about the markets here now. One of the things I want to reiterate is we've seen, or one of the things I want to talk about really quick is we've seen some pretty big FX moves, and you know what we haven't seen? We haven't seen really much in the tune of movement in equities. So what does that mean? I've been thinking about this like the last 24 hours or so. I'm like, man, if the stock market actually just does correct, like let's say 10%, and I'm not look, I'm not here to sell you on an idea that the S&P is going to drop by 50% in the next 3 years. Do I think that that's a risk? I do, because of longer term, just the amount of money that we plowed in the market. I have been always thinking the risks of a higher inflation, low growth situation has always been one of those ideas in my head. And listening to Larry Summers over the course of the last, or this morning, and just hearing his take on it. I mean, I don't want to say it confirms, but it definitely makes me feel that we are going to have a period of, higher inflation and low to little, if zero growth. And, that type of stagflationary environment is not going to be good for stocks. And, like I said, I'm not going to be here. I'm not going to sit here and say, oh, well, the stock market's going to lose 50% of its value or anything like that. But what I do think can happen in relatively short order is we do lose 10% of, the S&P, from current levels. And if we correct 10%, that takes us back to basically the breakout point here around the 3,600 level. I think that's very realistic over the course of the next couple of months. Now, and a lot of it is buy the rumor, sell the news type of, okay, all the good, how to look at it is, okay, all the good news is in the market. And now all we have to look forward to is higher taxes and I mean, we know higher taxes are coming. And if we do have some sort of, infrastructure spending package here in the US, well, that is for sure going to be met with higher taxes. So let's just imagine that the stock market corrects, we get the buy the rumor, sell the news. We've seen all the good news coming out. So now we see a little bit of a sell-off. So if we do, what happens to currencies like the Aussie dollar, the Norwegian krona, the dollar Canadian, that we've already seen such massive moves? This is where that head and shoulder pattern of the Aussie dollar actually plays out. And I'm really looking forward. And I know I sound like a broken record, because I think I said we had a similar conversation about this currency pair yesterday. I am so excited for a move to 72. Let's say we are in a higher inflationary environment, low growth or no low growth, whether it's stagflation or just an inflationary environment? Let's just say it is. Regardless, it's going to be a higher inflationary environment. It's going to be an inflationary environment. And I think that's going to be a big swoon for commodities. Whether it, treats us as consumers good or not, it's not relevant. What would be relevant here is, a move in the, like, let's say it's a move in, why the hell is that not here? There you go. Can you guys see that? Is that okay? Okay. So I'm just going to leave it like this. I'm joking. Like a damn cartoon character. But I guess the point I'm trying to make here is I think that the Aussie dollar is going up past 80 cents at some point. Like if you bought the Aussie right now and you closed your eyes for a year, I think you'd be happy with it, to be frank with you. I just think that we're going to get a better opportunity to be a buyer at lower levels. I really believe that. We're in a correction period right now, and I think that that correction could last to the 38% retracement of this entire move comes in at 71 cents. So I think between 72 and 71 cents, you just have to start legging in and finding some sort of this will be the area that I really establish a trade going into the fall. Those are just my thoughts. And I guess the question is, are we even going to get down there? I hope so. I really hope so. I hope so, because I want to make money on the downside and then reverse and get long, over the course, and just think of this, prolong that out for the next several months. That's kind of like my way of thinking. All right. With that being said, let's talk about what's happening now. Let's talk about here and now versus what I think might happen over the course of the next few months, because that's really irrelevant, right? You have all these people that that you may or may not listen to, but there's a lot of people out there. They're just like, yeah, I see the S&P going to 3,000, and we should see 3,000. Here are my reasons why. Okay, I'll see you later. And then you won't, like, okay, well, that's great, but how's that going to make me money at this very second? You know what I mean? And that's what the morning edge is about. Not I'm trying to give the morning edges. I'm trying to give you guys, and more of my what's on my mind, and then we can dive into the charts and see what we do for today. That's the difference, right? The difference is, let's get some actionable ideas for like right now. I can't pull that out of my rear end every single day, but usually I can give us some pretty good ideas. All right. So with the euro dollar, I do think that we are breaking down. Look, we're making new trend lows. I think the euro is going to 116 ish. I think this is happening. That's happening. It's not going to be easy. It's not going to be a straight shot, but that's happening, I think. And the reason why I say that is because the stock market is not far from all-time highs. I mean, look at the S&P, and I'm short some. I got short some yesterday up here at 39.50, but let's just imagine we get a little bit of a correction here. And by the way, I might as well write this down. So S&P support's going to be at, what is that? 38.88. So let's just start 38.90. Let's just write that down. 38.90, and same as yesterday. Yesterday was 39.50, right? I'm just guessing, but we're going to range because this is a false breakout. But let's imagine the S&P finally just gives us a little bit of selling at the end of the week. Well, what happens to the euro? I mean, the euro can't bounce. Do you think the euro is going lower? My 2 cents is, yeah, it is. Somebody asked me yesterday, well, actually a couple guys in the chat room, like, hey, if the Kiwi breaks back below 70 cents, are you gonna put in a new pip? If I wasn't busy last night, I should have. And all the times I thought about it, I'm like, let me wait for a little bit. Anyway, the Kiwi is bearish. But look at the euro. I think we trade down to 117.90 today. while we're below 118.70. 118.70. It's bearish, right? And we are going to, where are we going to? 117. Did I say 117.90 or 70? 90. Cable. Look at what's happening here. We're below the ascending trend line. This is the one, just so you guys know. This is the one. This is the one that I really want to be long. Down here, 134, 133. Somewhere down here, I want to be long. Like, just like I want to buy the Aussie. I want to buy the cable too. I really believe that the sterling is going higher over time. I think Brexit beat the crap out of UK, and then they got a double whammy. They got a double whammy and double whammy from not only Brexit but then COVID. I think their economy is going to bounce back quite aggressively. So those of you in the UK, I just think that over the next couple of years, I really want to be long sterling. Now, technically, I just want to be long because we're above this long-term, descending wedge breakout point. So I just want to be long down here somewhere. But that means that in the near term, that's probably, we could very, very, very easily be going there. So look at this just technically what we're seeing. Ascending trend line broken. So now while we're below 137.50, we have to be bearish. Okay. We could get a false breakdown today. I mean, what's to say we can't? We could. S&P rallies to all-time highs while we're sitting here, because why? Because that's what stocks do. And, next thing you know, we get a false breakdown. I don't think that's happening though, but anyway, 88% retracements right here, 136.50. Let's imagine over the course of the next couple of weeks, we trade down to 134 to this 127% extension, some of this, support down here. I think that's all doable. Support 136.50 roughly. And that's near the 88% retracement. Aussie. Yeah, we break, is that a spike low right there? It is. Okay, so if we break 75.60, this is going to be ugly. We're in range for now. I believe it's breaking down. I just I have to keep us in range while we're above this neckline. I just have to, resistance will be here, 76.70, just in case we do get a bounce. Like, North America, all them traders here in the US and Canada, they're like, oh, we're going to buy stocks. And then next thing you know, you get some Aussie strength. I think it could, take us back to 76.70. I think it's eventually going to break down. Now, Kiwi, flip side to that is Kiwi's bearish. I mean, look at this thing. And I wussied out yesterday. I took a nice profit out of the Kiwi. I took some profits out of the Kiwi, and I'm like, man, I knew it. I knew it after I did it. I'm like, yeah, I should not have pulled. It's harder to pull the trigger on a fresh trade after you've pulled profits. It always is. That's not uncommon. So
just one mistake after the other. We don't need you here, bro.
Yeah, I know. You can take over.
Real mentors.
It's all yours. I'm done.
Only make right decisions, right? They always win money. Never do a mistake, ever. You should have learned that from Twitter years ago.
All right, I'm back. Yeah, I know. But the thing is when you pull profits, it's so true, right? You pull profits off a trade, and then you're like, I'm going to get back in, and it's so hard. It's so much harder getting back in. It really is. I made actually a really good mistake yesterday when I pulled the euro yen short off, and I pulled it off, and I took it off the board, and I'm like, oh man, that wasn't the 200-day moving average. That was the 200 period moving average.
I'm actually horrible at re-entering a trending market. That is why I've accepted that, and I've changed my trading style to longer term. So this way I don't get out of a position, because if I get completely out of a position, I find it very hard to go in if the market is trending.
Yeah, I hear you. I'm gonna let me finish this up so I can give it to you guys. 69 cents here. We are definitely bearish. I guess if the Kiwi makes a bounce back above 70 cents, I would say maybe closer to like, it's hard when you're, as you just pointed out, as Stu just pointed out, when you're trending like this, it is hard because you're like, okay, well, is this the low? I don't know. Where am I going to draw my fibs from for a retracement? I don't know. So I'm going to say maybe above 70 cents, and I look for some of these hourly previous, like we held around here for quite some time, the 70-20 level. So I think if we can get a bounce back up to 70-20, it might offer you an opportunity to be a seller up there. I wouldn't mind selling up there if I can. If I can get it, I will. I'll take it. Dollar Canadian. So everybody should know this is the descending wedge in the dollar Canadian. Huge, right? That is mega resistance at 126.10, because our highest today is 08. So 126.10. If we break this, we flip instantly to bullish. But we have to keep it on range for now because it hasn't broken. And I think it's going to eventually break, especially crude oil, I think, is rolling over. So let's imagine that it is going to break down. What I want to do is I want to be, and I have enough right now, but I don't mind adding if we get down here. So if we get down to 125.40, I will be adding, because I think it's eventually going to 129. A couple of the guys that I work with, I was at Gelos. I've been talking to them about, being long here, the dollar Canadian, and, talking about some of my longer term upside targets. And they all, there was a note that one of them sent yesterday from a bank. Let me see if I put it in the chat room. Oh, did I delete it? But I put it in the chat room. I did yesterday. So let's go here. This is regarding yesterday's Canadian policy. I have to find it from yesterday. Yesterday is the 24th. Did I skip over it? Or 23rd? I did. 23rd. That's not it. Here it is. No, that's not it. Here. From a Canadian bank. This is not a surprise shift. That was the shift in monetary policy yesterday, when they shifted to, basically pulling liquidity out of the market. As it's hard to believe anyone thought they'd extend the PBPP, CBPP, and the CPPP programs are all ending on schedule as expected. The market reaction to the announcement is totally overdone, and there's no real new information here. So basically, and I wrote to you guys yesterday, and this, I got that after I wrote this to you yesterday. So I want to point this out. Yesterday, let me go to basic technical. The US dollar Canadian slipped below the 25.50 levels. The Bank of Canada is halting all COVID liquidity programs. We have seen currency strengthen this last year as central banks have offered liquidity to help the economy. Removing it may allow for some near-term weakness, dollar Canadian higher in time now. And I was thinking that, then I got that analysis from the guy that I traded with, and so we dipped down to 125.50, and then or 30 at 20s, and we bounced back. I just think that this is going to allow for the dollar Canadian to rally. But also think about this, guys. Stocks like liquidity. And when central banks pull that liquidity, stocks are not going to like it. They're just not. As central banks normalize, stocks are not going to like it. It's like taking the punch bowl away. So, and that's just going to lead to a higher dollar Canadian as stocks come down. So anyway, let's continue on. Let's get through this. So if we break 93.75, we should attack next the 618 retracement, which is 97 or 94.72. So let's go 93.75. This is on the Swissy. 94.70 would be next. Did I just miss an asterisk? I did. Where's my asterisk? I thought I put an asterisk there. This is bullish, as it's been bullish every single day. We are rallying now. So now support is at any dip back down to 93.20 should be supported. And remember what I told you guys about yields on the FACE webinar today. I think yields are going up from here. Why? Because we hit channel support and we held it. This is a 10-year. This is a 4-hour chart of the 10-year yield. And, look, we just hit support horizontally and then boom, So if yields are going up, the dollar Swiss is probably going higher. And so is the dollar yen, which we talked about. US dollar Norwegian krona, big resistance now. So big resistance overnight at 860. I'm going to call it 868. So if we break 868, this is where we get bullish. Because I've been saying, well, 873 is this previous high up here. But I really think now that we've held this, that's where it gets bullish. Now, if you guys haven't read Stelios's blog, nice blog post, Stel, I did tweet it. And I expect you to get 400 more book sales out of my tweet. I'm just kidding. But hopefully
at least.
At least from the four real followers I have on Twitter, you should get a lot of book sales. So, it's funny. I've been on Twitter for 10 years now. I've got, I don't know how many followers, 50,000, 60,000, something like that, whatever the number is. I can only imagine that 95% of those people are not active anymore over the years, because people
drop out.
They start a Twitter account, then they go, oh, that's cool for 6 months. And they're like, okay, I'm going to, move on to something else. And, and they come back from time to time, but whatever. 38% retracement to keep the bullish trend alive comes in at 856. So that should offer support today. I think we're going to eventually break out. So dollar MEX channel support still holding. That support is now at 2037. And how important is this resistance here? I mean, I know overnight we went to 2084 and change, but spike high, spike high, spike high, spike high. It's 2084. Did we write that yesterday? I'm pretty sure we did. Let me go back and look. I never go back and look unless I'm with you guys. 2084, yesterday. That was yesterday we wrote that. And the high today, 2084.39. I mean, it's really important. Okay. I still think we're range bound. I do think it's going higher. It's just, I mean, look, this is a, let me draw it out for you. This is a, no, this is a, there it is. A little inverted head and shoulder pattern, take us back up here, maybe over the course of the next couple of days. Ending a little minor downtrend, slide uptrend here. I think that's all doable. Okay. Dollar yen. I'm telling you, this makes it really difficult to short the dollar yen. This thing is not pulling back. And I'm gonna write down 108.30, and I have no position in the yen right now. Zero. This is key, and this is bullish. Same as yesterday, or around the same numbers. Dollar index. I mean, the dollar index looks like we're going to 94.50 over time. Support now is at 92.15. Where's the next resistance? Let's figure that out really quick, just in case the dollar just continues to take off here. So, and 92.83. We have to go bullish now. 92, let's call it 92.85. Support is 92.15. And this is flipped to bullish today. Why? Because while we're doing this, we're sitting here on breakout territory. Right? I mean, wow, Nasdaq's getting crushed. Thanks, yields. Yields going up, crushing the Nas. I think, did we write down S&P? We did. Gold, silver, Bitcoin. Okay. So Bitcoin's a little stronger today. I guess I should have known better that we didn't break 5250, 52,500. It's got to hold. I would say this is a descending trend line. I still think Bitcoin's peak. So 58.5 should be resistance now. 58,500. 52.5. I'm going to keep us in range. Silver is a weak sister. Weak. 24.80. I know we've been writing that down. I'm keeping it in range for now, but resistance intraday should be 25.40. I'll even go 25.50. I think it's just waiting to drop. And if you missed my analysis yesterday, this is gold. Okay. I'm gonna give this to you guys like this. Let's go to. This is your daily chart, right? Follow me. Bear flag, right? Ah, shoot, I grabbed the wrong damn thing. Bear flag, right? That's where I think gold's going. Just so we know, just so we're clear. Okay, so now let's do this. And then after I'm done doing this, we're all going to thank Dale. Okay. Neon. Okay. Here we go. 1, 2, 3. Divergent relative strength. 1, 2, 3, drive to a low. Then we bounce. You guys with me? Yeah? That's good. That's good.
Jawohl.
All right. So that's what I think. That's what I believe, Steve. Whether that happens or not, I think if it gets down to 1600, you got to be a buyer down there.
I can't disagree.
Well, that's a 78% retracement here. It's near a big breakout point. So you get down to 1580 to 1560, you just got to be a buyer down here. Even if it's just I think it's going to be a tradable bounce. Maybe it's not the low overall, but maybe I think this is the place where you want to be long. Okay, but we'll see. Okay, where are we at? Oh, I need to write it down. So let's write that down, or not write that down, but let's write stuff down. So 1720 is still support. I think if we break through 1720, that's going to open up some downside. I think the bear flag's trying to play 1720, obviously 1760, and we're bearish while we're below. Bearish while we're below 1760, 1765 actually, but that's all right. 1760 is key. All right, the bias chart's done. Finito. Finished. All right, Steve. What's going on? What are you thinking?
Not thinking much. Just eating some.
What's new with that?
Some pistachio.
Did you say some pistachio?
Yeah.
Oh, you're eating pistachio.
Yeah.
One of the worst things that happened to me in my life ever is I grew a pistachio allergy.
Oh.
Yeah, I mean, I could eat bags of pistachios.
Before you did that, did you ever have the opportunity of eating the Aegina pistachio Fistikeginis?
You mean the sweets?
No, the Greek pistachios.
Let me show you. This one's. Wait, is there a camera? This one's.
I'm sure I have. I mean,
when you open them, they're like this.
Yeah, those are ones we eat all the time, right? So I'll tell you what happened to me, and then I'm gonna let you guys go. I've eaten pistachios pretty much my whole life, and then I went to my friend's house a couple years ago, and he had them sitting on his kitchen table. We were chit chatting. They had that and some chocolates and whatever. And I grabbed some pistachios and I ate a few, and we were just talking, and I'm like, my wife said, okay, I'm gonna meet you at the sushi place with the kids, and it was at the bottom of the mountain. He's up on the mountain, so I drive down, and as I'm driving, I'm like, oh man, it's itchy. And then the next thing I look in the mirror and I'm like, ooh, I'm red. I'm like, what the hell? And by the time I got to the store, my wife's like, you're allergic to something. You need to go get some Benadryl. So I got Benadryl, which is allergy medicine, and I fell asleep for a couple hours and it went away. And I was like, wow, that's weird. So a couple weeks later, I was back at his house again. He had his pistachios there, and I'm like, I'm going to eat a pistachio. They're so good, but I'm wondering if this is where I'm allergic to. I had it again, same episode, and I was so bummed out. So I can't eat raw. Ever since then, I couldn't read.
Are you sure it's not just his pistachios which have some kind of poison on them?
it could be.
I mean, are you sure? Are you sure he also believes you're his friend?
Yeah, right. Maybe one day I should eat a pistachio just to see, because it's like one of my most favorite things in the world. It really is. All right, so guys, I'm going to pass it over to you. I hope you guys have a wonderful trading session, and I'll see the rest of you in the chat room, and then I'll see you guys on the daily roundup in a few hours.
Thank you, mate.
Thank you, Balaki.
Balake
or whatever it was.
Yeah, no, isn't that funny?
Balake.
Vlakas in Greek means stupid. Yeah.
Yeah, I know. People, when the first time I went to Greece, Lisa's aunt and uncle made fun of me for days. Yeah, because Lisa means lice, right? So
Lisa, yes. Yeah, that's why the equivalent name in Greek is not called Lisa, it's called Lisa with Z,
So we had stupid lice running around, and anyway, I gotta go. All right, talk to you guys later.
Okay,
Maybe
mate.
Blake.
That's the problem with allergies. They can develop at any stage of your life, which is really weird, or go away without a notice.
Yeah.
And we have no idea why.
I hope I'm never allergic to ice cream or chocolate or wine.
If I become allergic to meat, I think I'm just going to commit suicide. That's going to be the end of my life. There's going to be no point afterwards living.
Yeah. Yes. So what's moved since F.A.C.E an hour ago? The euro is catching a little bit of a bid. Equities are doing well. Surprise, surprise.
To be honest, nothing really has moved since an hour ago. So
yeah,
I think we should go straight to questions. See what people want to
absolutely
look at. So Nasdaq coming down. Okay, let's pull up some 4-hour charts. Okay. So here's the DAX on the 4-hour chart. So far, as you see, doesn't look anything but bullish. Here's the Nasdaq. So Nasdaq, speaking of the Nasdaq, you know, there is still the possibility that this is not a really bearish move, right? So keep that in mind. I repeat, this is a 4-hour chart. So we're looking like shorter term picture at the moment. You know, we get a move below, what is it, 12,700, then we can be more confident that the Nasdaq is going to produce a lower low. Until that happens, keep an open mind, because we might as well just be consolidating and move higher from there. Nasdaq Dow move feels bond related in the last hour. Yes, Simon. It is actually. It is. Meaning, I think that as long as the whole yield increase thing is going to be taking place, the more likely people are going to be to rotate to safer destinations having to do with equity portfolio. I think a lot of investors have learned the lesson from the last 12, 13 years that getting out of positions completely is not the way to go. Of course, at some point that's going to prove devastating. The fact that they've been indoctrinated to, stay invested in the market because, quote unquote, it can never go lower. But until that happens, they know that this is the place to be. So instead of getting out of positions, what they initially do is rotate to safer destinations, meaning rotating out of quote unquote growth stocks, because the only growth in these stocks is their price is going up, because actually the vast majority of them are not companies that are growing, are actually companies that are making zero money. So yeah, that's what I think. So that might continue. Let's have a look at the Dow, since you mentioned it on the 4-hour chart as well. Here it is. Yeah. Dow so far remains, clearly very well bid. I mean, this pullback is kind of minor for the time being. And here is the FANG stocks, also very orderly so far. One move lower, perhaps a consolidation, perhaps lower from there. I would say against 2051 lower. Okay, euro crosses you mentioned. Yes, let's have a look at them. So euro crosses. Let's start from the euro pound. Euro pound out of the channel, but uninspiring so far, right? So yeah, definitely some kind of a bullish development, but I would want to see some momentum. Otherwise, we might just have some kind of a consolidation here. Now, having to do with Euro Aussie, broke out yesterday. We mentioned that yesterday. I think that opens the door for another leg higher, at least one more leg higher as part of a corrective rebound. I think the confluence of resistances at 158.50 looks very, very attractive as an upside target. And here is Euro Kiwi, which also broke out from this descending trend line resistance, quite a powerful one. And we're getting closer to the first area of resistance, which is at 170.50. We're actually very, very close to that. We break through that. I think the next upside target is then 173 to 173.20. And we go above that, and then we have something different in hand, meaning we're looking at a much bigger kind of correction, which might be more complex and last longer. But for something like that to take place and happen, some risk off is going to be required, because that's definitely going to help a lot these pairs overperform. That's for Dimitris's question. Platinum. So let's have a look at it. There it is. Nothing has really changed here. I think this is a corrective move. Within the context of the corrective move, it's likely to see a lower low, right? So a move below like 11.8, whatever that low was. But I think that platinum has a lot more to go following the end of the corrective move, whenever that comes. Copper, also nothing has changed here. Still uncertain if this is a triangle or a channel. We'll find out, sooner rather than later. One of the two it has to be. But I think that it clearly shows strength in the way it is correcting following this massive move higher. Because after this massive move higher, holding up so nicely is showing, relative strength. So, yeah. Here's nickel. I think it still looks very heavy.
Wow, what a drop that was! Oh my
God.
And
look how it's been unable in essence to produce a recovery of, a proper recovery following that drop, and that is a very bearish signal, if you ask me. I think there's more to go.
It's not even bouncing; it's just consolidating sideways.
Yeah. Here's Bitcoin, by the way. Oppositely from Blake, I'm not sure that Bitcoin has stopped. In what sense? I think we're very near that, but I wouldn't find it unlikely to get one more high within this big wedge, and would be even nicer if that high overshot to get people, super extra bullish before we see a much deeper correction. I wouldn't even be surprised if we go back to 30,000 following something like that. And here is Ethereum, a little bit of a different type of formation here. It looks more like a triangle, so behaving differently. Still quite a lot of room to the downside, even in the short term. Let's see. What else? Can you look at pound CAD? Absolutely. Pound CAD it is. So here's the pound tab, and here's the pound CAD. So that was a bearish development, breaking through this trend line, right? So short term, that was a bearish development. I don't remember when was the last time we had discussed about that. It was several days ago. But looking at the bigger picture, keep in mind that we seem to be in a broader consolidation, and an even broader consolidation, even if you zoom further out, right? So it depends on your time frame. I would have to say that short term it looks bearish and can easily attack the 170 area, right? Speaking medium to long term, I would say there is no real trend here. So I don't know exactly what time of horizon you're looking at, but just to be on the safe side, I covered all of them. Yeah, I did cover Platinum, mate. Your web was down, no problem. I can say it once again because it's very short and simple. And what I said about it is that nothing has changed because it's still correcting its prior gains within what seems like a channel. So, once we break through that channel, I think we're headed much higher, but there is the chance that we even see a lower low before that happens, right? Keep that in mind. So we need to give it a little bit more time. But I do think this is a corrective move that's going to get resolved to the upside. Are you surprised though, at how well CAD is holding up despite falling crude? Yes, I mean, it is holding up quite nicely, undoubtedly. I'm not extremely surprised because in general, I believe commodity currencies are going to overperform in the time ahead. But yeah, I would have expected that by now we should have broken this channel for a bigger corrective move to unfold. It is definitely something to note, though. I mean, this relative strength is noteworthy for sure. We do break through the channel, though. I do think that we open up even the 130 area for this corrective move to extend itself, right? So I think we can easily make it up to 130 if we break through the channel before we see lower levels. I mean, and of course we reassess, right? Because it also depends on how you go there. I mean, we might be at 128.50 in such a way moving higher that I'm going to immediately tell you, for example, listen, I'm expecting a larger rebound to unfold here. So it's not, I mean, it's easy to set some targets at a theoretical basis, but you need to keep reevaluating as a move unfolds based on what the market gives you, meaning structure, momentum, correlations, right? But theoretically speaking, we break through the channel. I think we open up the door for 130, and we take it from there. Let me see if there is something else I missed. No, doesn't seem to.
Anything? No.
Yeah. Okay.
Great. Thank you, Steve. Thank you very much. Always
Thank you,
comprehensive.
Stelio.
Thanks,
Okay,
everybody.
guys. See you later. Bye-bye.
Bye, everybody.